Right friends, welcome back to Banking Awareness lecture series. This is the 26th module. As I have already told you, in the first phase we will try to ensure all the relevant concepts within 30 modules, and at the same time please listen to Banking Awareness questions and answers, because I am covering several important concepts through questions and answers also, right? Look into the first one. What is the difference between Banking Codes and Standards Board of India, Ombudsman and Chief Customer Service Officer? These three things are slightly confusing from students' perspective, and let us differentiate between Banking Codes and Standards Board of India, Ombudsman and Chief Customer Service Officer. If you look at the Banking Codes and Standards Board of India, it is a self-regulatory organization. It is the internal code for themselves so as to give better quality to the customers. That is internal regulatory mechanism. So, this was established based on SS Tarapur Committee recommendations in 2006, and it is established as a society under Societies Registration Act of 1860, and here Governing Council is nominated by Reserve Bank of India. It is a self-regulatory organization so as to define self-code for better customer service. The second important point is Ombudsman. Ombudsman is basically external mechanism. It is appointed by Reserve Bank of India. If customer has got any grievance, he should apply to Ombudsman. So, Ombudsman is appointed by Reserve Bank of India, and if customer has got any grievance, he has to approach Ombudsman. So, we have already discussed in previous lectures what is Ombudsman and what are the rules and regulations with regard to Ombudsman. Please listen to this lecture. But the third one is Chief Customer Service Officer. First one is BCSBI, that is internal self-regulatory mechanism. How to give better service, that is devised by banks themselves. Second one is Ombudsman, that is external. We can approach Ombudsman if some grievance is there. Third one is Chief Customer Service Officer. Reserve Bank of India stated for big banks, please establish your internal Ombudsman. When the customer has got grievance, he is coming directly to Ombudsman appointed by Reserve Bank of India. What is the need for it? Please establish your own internal Ombudsman. That's why Reserve Bank of India gave instruction to establish Chief Customer Service Officer. And as per the Reserve Bank instructions, all the public sector banks have to establish Chief Customer Service Officer. At the same time, 5 private sector banks, ICICI Bank, HDFC Bank, Axis Bank, Kotak Mahindra Bank and IndusInd Bank. These 5 banks are to establish CCSO, and at the same time 3 foreign banks operating in India, Standard Chartered, Citibank and HSBC, have to appoint a Chief Customer Service Officer. Chief Customer Service Officer is internal Ombudsman, so that the customers, if they have any grievance, they can approach CCSO before approaching Ombudsman. So, that is the concept of appointing CCSO by Reserve Bank of India. In the initial phase, Reserve Bank of India stated only all the public sector banks, 5 private sector banks and 3 foreign banks operating in our country. So, this is the clear differentiation between BCSBI, Ombudsman and CCSO. CCSO is internal Ombudsman, right? Interest subvention scheme. Some of you have got doubts about interest subvention scheme. This interest subvention scheme is there for some sectors. We are taking agriculture as the example. And if the farmer want to access bank loan, that is for crop loans. Crop loans means basically to raise crops. The maximum time period for repayment is 1 year. In crop loans, maximum time period for repayment is not more than 1 year, and for these crop loans, each farmer up to a limit of 3 lakhs can get bank loan at 7% interest. Banks will charge for farmer only 7% interest, and 2% will be paid by central government to bank. That is interest subvention. Banks altogether will get 9%, but the farmer will pay only 7% to bank, and remaining 2% will be paid by central government to bank. This 2% is not sacrosanct, it may vary from year to year. For the year 2015-16, government announced that interest subvention will be 2%. So, up to 3 lakhs crop loans which are to be repaid within 1 year, farmer will get loans at 7% interest from banks, but 2% interest will be paid by central government to bank. That is interest subvention. In case of agriculture loans, you should forget about base rate and all. As per RBI instructions, banks should not look at base rate. Whatever central government guidelines are there, they have to follow. As per the central government guidelines, farmers should get 7% interest loans, and central government will pay 2% to banks. And if farmer is paying back within 1 year, that means within the time period prescribed, farmer will get interest at 4% only. If farmer is paying back within the scheduled time, farmer should be charged only 4%, and remaining 3% will be paid by central government to bank. Overall, bank will get 9%, but if farmer is paying back in time, 5% will be paid by central government to bank. Farmer will pay only 4%. So, the interest subsidy paid by central government to banks is interest subvention or interest subsidy. That means farmers should not be overburdened, and farming community are already under distress. That's why this interest subsidy is given by central government to banks. That means farmers are charged lesser interest, and some interest will be paid by central government to banks. Right friends, this is interest subvention. If you look at the exports, similar scheme is there, that is the interest equalization scheme. Recently, Government of India notified interest equalization scheme. If someone says interest equalization scheme, that is for exports, that is for promoting exports. Here, interest subsidy of 3% will be given to promote exports, and this is valid for a period of 5 years from April 1, 2015. So, interest equalization scheme is for exports. That is also interest subsidy paid by central government. So, this interest equalization scheme, if someone says, please refer to exports, right. So, this is about interest subvention scheme and interest equalization scheme. And some people asked to differentiate between BPLR, base rate, and MCLR. BPLR is benchmark prime lending rate. This benchmark prime lending rate, that means the bank will fix one rate. This was brought in 2003, and under benchmark prime lending rate, banks can give loans below benchmark prime lending rate also, because of which there was no transparency, there were several corruption allegations, and subsequently Deepak Mohanty committee was instituted. Deepak Mohanty came up with some mechanism which is known as the base rate. So, base rate was brought in 2010. At present, base rate is in vogue. Banks should not lend to any customer below base rate except some exempted categories. As and when notified by central government, banks should not lend below base rate. All the customers should be charged above base rate only. So, this is base rate mechanism which came into existence on 1st July 2010. Now, from April 1, 2016 onwards, MCLR will come into picture. This MCLR is marginal cost of funds based lending rate. Why this base rate is being replaced by MCLR? Because of the reason, in recent times, this repo rate is reduced by 1.25% in 2015. In the year 2015, RBI reduced repo rate by 125 basis points or 1.25%. But commensurately, banks have not brought down their base rates. RBI expected when the repo rate is reduced, banks will bring down their base rates, but that didn't happen. Under these circumstances, Reserve Bank of India brought a new mechanism, that is the marginal cost of funds based lending rate, or MCLR, which will come into effect from 1st April 2016. Under MCLR, what will happen is, before deciding MCLR, bank will look at their costs, like latest cost conditions like deposit rates and latest repo rates, to reflect in the MCLR. For that purpose, in future, under MCLR, what banks will do is, they will calculate benchmark rates for different tenures, for different time periods. Now, banks will calculate their benchmark interest rates just like what they are paying for deposits. All of you are well aware, if you are depositing for 3 months fixed deposit, you will get some interest. If you are depositing fixed deposit for 5 years, you will get some interest. And if you are depositing for 10 years, your interest will be slightly high. Likewise, for loans also, banks from now onwards under MCLR will set or will determine benchmark rates for different tenors. So far, base rate is the same. It will not vary for various tenors. But in future, under MCLR mechanism, the benchmark interest rates will be calculated for various tenors. For 1 month, for 6 months, for 1 year, like that. So that is the major difference between base rate and MCLR. Base rate interest will not vary depending on the tenor, but under MCLR, different benchmark interest rates will be calculated for different tenors. The basic point here is, under MCLR, the reduction in repo rates will be reflected immediately, because for different tenors, different interest rates will be calculated under MCLR. And MCLR will come into effect from 1st April 2016. So, 2003 benchmark prime lending rate discarded because there was no transparency, as loans in those days were given below BPLR also. Subsequently brought base rate. Base rate is no doubt transparent, but when the repo rate is reduced, it is not being reflected in the base rate. For that purpose only, MCLR will come from 2016 April 1, and under MCLR, whenever repo rate is reduced, whenever deposit rates are reduced, they will be reflected instantly in MCLR, because MCLR will be calculated for different tenors, right? So, this is about BPLR, base rate and MCLR. Depositories, I would like to tell you, whenever you are opening bank account, your account is maintained with the bank. If you are opening bank account with ICICI Bank, you will be customer of ICICI Bank, and your bank account will be maintained with ICICI Bank. Similarly, all of you are well aware about Demat accounts. If you want to purchase shares, you require Demat account, and your Demat account will be maintained with depository. In India, there are 2 depositories. One is NSDL. This is the oldest and the largest depository in the country. NSDL is National Securities Depository Limited. Second one is CDSL, Central Depository Services Limited. So, your account is maintained either with NSDL or CDSL. So, your Demat account will be maintained with either of these, but bank will act as intermediary. So, NSDL, CDSL are called depositories where your Demat accounts are maintained, and banks will act as intermediaries. You will go to ICICI Bank and you will open Demat account, but actually the Demat account is maintained either with NSDL or CDSL, right? So, if you want to differentiate between depositories and depository participants, NSDL and CDSL are depositories where your Demat accounts are maintained, and banks are intermediaries and known as depository participants. So you will go to DP to open Demat account, but this Demat account will be maintained by depository. And instantly you may ask, what is the Demat account? Demat account is your account in dematerialized form or in electronic form. Right, friends? Look at the next one, net neutrality. All of you are well aware about internet.org and now renamed as Free Basics. That is of Facebook. And Facebook came up with the Free Basics where they want to give certain internet services free of cost. Certain internet services will be given free of cost through Free Basics, and if the customer wants remaining services, he has to subscribe for a data plan. This is known as differential pricing. So Facebook came up with the Free Basics, which is example of differential pricing. There is lot of debate going on between differential pricing and net neutrality. The persons supporting differential pricing or the persons supporting Free Basics are stating that internet should be made accessible to poor and marginalized sections of society. It will lead to internet penetration on a large scale. It is only differentiation but not discrimination as claimed by the proponents of differential pricing, but the proponents of net neutrality claims that some of the websites may be prioritized under differential pricing. That's why the main purpose of internet, that is non-discrimination and freedom of choice, will be lost. So net neutrality is basically to ensure freedom of choice, no discrimination, but the differential pricing of internet.org or Free Basics will be against the tenets of freedom of choice, which is the hallmark of internet. There is a debate going on in the country with regard to differential pricing and net neutrality. Government is yet to come out of its own policy as far as net neutrality is concerned. Let us look at the next one, startups and business incubators. And nowadays, the buzzwords are startups, business incubators, angel investment, venture capital. I would like to throw some light on this. What is meant by startup? Startup is a budding company in search of a scalable business model. If someone is coming up with an idea to manufacture cars, it is not that easy without much capital investment. But nowadays, these startups are basically meant for technology startups. You have good idea and it can be scaled up with moderate investment. If you want to establish some car factory, it is not possible with moderate investment. It requires huge capital investment. But if you want to be into some e-commerce, e-education, e-health, that means provision of services through electronic means, you only require idea. After that, with the moderate finance, you can scale up to millions of people. That's how the Flipkart of this country came up. Flipkart, Snapdeal, Housing.com, these are the companies which came up with a small idea, and the technology aided them to scale it up to millions of people across the country. So the definition of startup means budding company in search of a scalable business model, and the main concept is ambition, innovation, scalability. These are the main concepts of startups, and startups basically meant for a good idea which can be scalable, and basically it is technology related. Then only it is scalable with moderate investment. Now, lot of startup buzz is going on in this country. The Prime Minister of the country started Startup India, Stand Up India. But in India, the ecosystem of startups is not satisfactory. Only Bangalore is the city which came up with a good number of startups. But in other cities and tier 2, tier 3 cities, the ecosystem is not satisfactory. And recently, government came up with 19-point agenda so as to inculcate ecosystem in this country. So if someone asks what is a startup, that is the budding company in search of a scalable business model, and it aptly applies to technology related companies which can grow within very short time with moderate investment. What is meant by incubator? You may have idea, but that idea is to be converted into profitable business venture. That is a business incubator. You will go up with idea, and your idea will be fostered through entrepreneurship, mentoring and management expertise. That is the business incubator. That means converting your idea. You may have small idea which can be scalable. Converting your idea into profitable business venture, whatever is required, that will be done at business incubator. However, in our country, this incubation is also not up to the mark. If you look at Western countries like United States of America, this startups, incubation centers, angel investment, venture capital, these are the buzzwords. That's why the United States of America is home to several startups because of ecosystem, because of development of incubation centers, because of free availability of angel investment, free availability of venture capital in those countries. And the countries prominently are United States of America, Singapore, right? Look at the next one, angel investment. And in addition to startups, then incubation centers, angel investment is for startups, it is early stage funding. It is early stage funding, maybe few thousands of dollars, maybe from close relatives and friends, and emphasis will be on person. You may be starting one business, your uncle may support you, your well-wisher may support you. So angel investment is basically the startup investment or initial startup investment may run into few lakhs of rupees or few thousands of dollars, and normally supported by friends and well-wishers. The amount is not much, and when they are investing, they will not take money with interest, but ultimately if the firm is successful, they will take part of the ownership in the company, right? The other word is venture capital. There is a difference between angel investment and venture capital. Angel investment, I have already told you, given at a very early stage by relatives and friends, and it is few thousands of dollars. But if you look at venture capital, that is also for startups. But after assessing high growth potential, this venture capital is given, and it is moderate investment of around $1 to $2 million. And it is not personal money. If you look at angel investment, somebody is investing personal money, but venture capital fund is pooled up money from investors, and it is pooled up in a professionally managed way. And ultimately, once the firm is successful, they will take up some equity in the company. That means they will become part owner in the company. So this angel investment and venture capital, this is the well laid out mechanism in a country like America or Singapore. But in India, the ecosystem is not satisfactory, and if the venture capitalist invests in 10 companies, if one of them is successful, then he will get back his money through one company only, because if the startups are successful, then it will be a huge success. We have seen firms like Flipkart, Zomato, Housing.com, like that. We have seen several startups coming up in recent times. Right? So this is the differentiation between startups, business incubators, angel investment and venture capital. Right friends, before concluding, we have to differentiate between primary dealers and authorized dealers. Primary dealers are basically looks at government securities as well as money market instruments. Purchase of government securities while auctions are conducted and selling them in secondary market, so as to create liquidity for government securities. That is the primary task of primary dealers. And second thing is, they will also participate in selling and purchasing of money market instruments. All of you are very clear about money market instruments like certificate of deposits, commercial papers, call and notice money market instruments. So these are all examples of money market instruments, and primary dealers' main purpose is purchase and sale of government securities so as to create liquidity for government securities. Second important point is to trade in money market instruments. and as these two are controlled by Reserve Bank of India, so the regulator for primary dealers is Reserve Bank of India. So if someone says primary dealers, please don't get confused. They are basically to trade in government securities and money market instruments. The last one is authorized dealers. Basically to look at the foreign exchange transactions for banks to take up foreign exchange transactions, because lot of foreign exchange transactions are required. Several NRIs are staying abroad. They would like to open NRE account, FCNR account. At the same time, exporters and importers, a lot of foreign exchange transactions are required. And RBI is authorized under Foreign Exchange Management Act to look at the foreign exchange transactions. And the banks which are authorized to do foreign exchange transactions are authorized dealers. So, RBI will nominate certain banks to act as authorized dealers. So, if someone says authorized dealers, don't get confused. Authorized dealers are the banks which are authorized to transact foreign exchange related transactions. So, three things please don't forget. Depository participants. These are the banks which are permitted to open Demat accounts, but actually Demat accounts are maintained with NSDL and CDSL, which are known as depositories. Second thing is primary dealers. Primary dealers transact in government securities and money market instruments. Third one is authorized dealers. Authorized dealers are the banks which are permitted by Reserve Bank of India to transact in foreign exchange related transactions. Right friends, with this let us conclude lecture number 26. Please do join for 27th module. Have a nice day. Thank you.